I'm going to go a little off-piste with this presentation because this presentation is designed for people who are fairly comfortable with some of the technical aspects, which some of you probably are, but just in case you're not. I'm going to try and describe to you what we as a company are trying to do under very difficult circumstances for the junior resource industry. This presentation is also going to be on our website as of this afternoon, but it should on its own be able to be read through. There's some good details there, and if you want clarification on anything, we do have a stand, so as you exit this area into the hall, we're on the first booth on the right-hand side, and myself and my team will be there to answer any questions should you feel inclined to do so. Alecto Minerals is a company on AIM. That's our share price performance this year. Not particularly encouraging unless you see it as a buying opportunity. But it has in fact matched pretty much AIM in general. We have a significant shareholder in Savannah Resources, another AIM-listed company. They were the vendors of one of our assets. And whilst we have a fairly small market cap, we were in fact double that just 12 months ago. During this time period, we've actually increased our resource 131%. So there seems to be a disconnect between our performance and share price. We'll talk about that in a minute. As a company snapshot, we're in East and West Africa. That's Ethiopia, Mali, and Mauritania. The key things here is we have large tracts of very attractive land. Not all of them have an existing resource. They're therefore fairly costly to manage effectively. If we look first at West Africa as a gold district, this is a very significant gold district from a global perspective. Mali itself is the third largest producer of gold in Africa. Some significant mines, over 50 million ounces of gold have been discovered in Mali alone. So this is an area where there are many elephants. But it's not always elephants that produce the best results. Our Kasanta Gold Project sits across two very significant opportunities. This is the Transparent Shear Zone, and this is the Senegal-Mali Fault. And the reason I'm saying that is because those are the major drivers for the geology that creates gold mineralization in this area. And as you can see, our 5, now 4 we've amalgamated to these licenses, sits right across that shear zone. This is a enlarged position on the slide showing the 5 or now 4 areas broken up into 2 distinct areas, on the east here and on the west. The key thing for us is if we have a sufficiently large and attractive piece of ground, but raising funds in this market is challenging without suffering significant dilution, you've got to find a different way of making yourself attractive. We'll talk in a minute about joint venture opportunities, but here we want to talk about monetization of the things that we've been doing recently. So we have, in the past year, created a 250,000 ounce resource with the potential to increase that incrementally, but it will never be an elephant. It's not going to be trying to get into decal size of 5 million ounces at 3 grams per ton. But it doesn't mean to say that you can't make good money out of it. So we're actually talking with our neighbors, because if we take our 250,000 ounces and we talk to Golden Rim, who's an Australian-listed company with close to 200,000 ounces, and we add in Desert Gold, a Canadian-listed company with 100,000 ounces, we've got over 500,000 ounces in an area that already is rich in resource-producing companies. So what does that tell you? Well, it tells me that there's an opportunity here to talk to our neighbors, and guess what? That's what we're doing. And there's an opportunity here to treat things a little differently to mainstream thinking. All of these sit within a 10-kilometer radius. So a modular plant sitting in the middle here, potentially, could deliver really nice returns at low cost. And that makes an exploration company to a producer and completely changes the way the market would rate us. We'd have a complete re-rating. That's the sort of thinking we're doing. On the western flank, we have 3 areas which we've done a lot of work on, but no resource drilling as yet. The opportunity here is to joint venture it, or raise further funds on the back of other good stuff to do it ourselves. So are we talking to partners? Yes, we are. Are we going to be able to deliver on those? We'll have to see. Certainly, we've had success in joint venturing elsewhere. Ethiopia, we have 3,000 square kilometers of ground. That's a huge amount of ground. We'd have to have raised about $10 million to give it even a fleetingly good opportunity to understand what lies beneath it. In these markets, could we raise 10 million, the market cap of £7.5 million? No. So what do? We went to speak to someone who's got lots of cash and has aspirations in Ethiopia, Centamin, a FTSE 350 company with operations in Egypt. They love the Nubian Shield. They've had a recent investment in a company in Ethiopia, but we're looking for something more. So we now signed up a joint venture with Centamin. And as you can see, initially on the two different projects, Wayoboda and Asad Metikel, 1.8 million and 1.2 million gets them 51% of the projects. And if they go ahead and spend the full $14 million in terms of the maximum, it gets up to 70%. So where does that leave our shareholders? It leaves them with potential upside with no financial exposure whatsoever. So what I'm trying to address here in the minds of anyone who potentially is looking for investment is how can we do things differently to ensure that in a market which really is tough for junior exploration companies, we can actually start trying to add some value. Now, the share price hasn't reacted. Maybe on Monday morning we'll wake up after this talk and you guys have been so generous towards my thoughts that you'll start piling in. But the reality is this has to be a sustainable thing. We can't have these peaks and troughs. We can't simply have an idea floated out, expect people to buy. This has to be a sustainable business process. We have a really attractive IOCG, iron oxide copper gold project in Mauritania. We were going to be doing some work here, but we decided yet again the joint venture model fits. So we're now in negotiation with other party to look at joint venturing this ground. So where would this mean that we ended up as an organization? We've got quality ground in Western Mali. One flank, potentially in partnership with others, can have a low-cost mining operation. On the other flank, we are looking at another joint venture partner. We have Ethiopia, which is currently in joint venture, giving upside to shareholders with no financial exposure whatsoever. And Mauritania, potentially to add to that pot. And by the way, in this market, you have to be pretty aggressive and terse. If we can't find a joint venture partner for Mauritania, we'll let it go. The realism of the world we're in at the moment is if you can't make something pay for itself, you can't see a future in it, then I'm afraid, let it go. There are other projects out there as and when we need to pick things up. So, what are our development milestones in the shorter term? Okay. We are in the process of releasing results still from the work activity that was completed in Mali. So we need to combine that with our expertise to ensure that when we exit the current wet season, which is pretty much end of October, we can kick off with some cleared drill targets, which we will manage from our own balance sheet. The Centamin Ethiopian joint venture, we're waiting for the initial results back from their season, which completed also at the end of June. Those results still have to be released to the market. I haven't yet had wind of them. Centamin control the entire process, which is good for us because it means there's no cost. But equally, I can't control the outputs from Centamin. But that will include certainly some target generation at Wayoboda along strike for the next 2014-2015 season. And what does it allow us to do on the corporate side? Well, it allows us to think about progressing these thoughts and ideas to the next stage. One thing we are good at as a company, clearly, is picking up ground at a fairly low cost that's attractive to third parties. So maybe that's something we should be doing more of. There are a lot of companies who are still keen to get exposure into West Africa. And if we're able to pick up quality ground at a reasonable cost because of the context and the way that we're able to do business, almost working under the radar screen. It's very difficult for some of the big boys where we're at, AngloGold Ashanti, Randgold Resources, to be inconspicuous when they walk around some opportunities. And if a big boy knocks on your door, guess what? Your aspirations and price go up. So we can do things that are cost in a way that they can't do. So we'll generate partnerships. We have a clear idea as to what the opportunity might or might not be. And in some cases, we'll pick up ground only because we know that they might be interested in picking it up in joint venture with us. Okay, so hopefully you can see that from a simple perspective, we have a diverse portfolio of assets, huge exploration upside. We like the collaboration model in terms of joint venturing. And as and when, we will go back to markets to finance our own things, hopefully be on the basis of having some pretty good success beforehand. And that's the story. Thank you.